Good afternoon and welcome to Money Control. I'm Karunya and with me is Manisha Gupta. And today the spotlight will be once again on the energy markets, especially oil. When was the last time we saw oil fall 5% overnight?
Yeah, I know. No, you've seen those days there.
We have, but it hasn't happened in a while.
Yeah. But what I would want to look at is that we started this year with $78.
Yeah.
We went to 123. We're trading at 88 right now, and we're just $10 away from the lowest point of this year. And more importantly, we're trading at a 7-month lows. These are the prices that we saw before the Russia conflict began. So we've given out all of that premium into the markets already, and with the kind of economic data that you're working with, recession fears, the fact that you're looking at yet another interest rate hike, and this time around from ECB, you have US Fed meeting on 21st of September. Yesterday we've done 75 basis point of a rate hike from Canada. So I think the markets do not like that, and is the reason you're looking at a lot of unwinding in case of crude. Interestingly, not too many people are going short on crude at this point in time because you have a hurricane season, you have winter demand coming forward, but a lot of long unwindings definitely seem to be coming into the market right now.
Clearly, markets are so, happy with this development. A lot of companies, whether it's aviation, paints, and even, those
all marketing companies.
Marketing companies. So all of them are rejoicing big time. But will this joy or happiness be short-lived, like you said, because winter demand looks intact?
Absolutely. But another thing that the markets are watching out for is the UK PM's unveiling of the policy today. And what the markets are anticipating is you will see a short-term and a long-term policy there. I mean, she's come into power and there is some deliverance you would want to deliver as soon as you come in to ensure that those ratings stay there. And yes, the household bills, business energy bills are way too high. And what the markets are looking for, one, is that the fracking ban, which was levied in 2019, perhaps could go away. And that would be the most important thing to do. And the other is perhaps putting a pricing cap somewhere. That is something that even the UK opposition has been talking about. So if you hear any of those two things today, I think you would see some more decline coming in for the crude oil prices. And tomorrow you have the European energy ministers meeting.
What a time to take charge for the UK PM.
Oh yeah.
But if we look at even gas prices, it was long overdue that they had to come off at some point, the way they were soaring away. But is it because all of these policymakers are trying very hard to bring it under control, and will it stay so?
It does look like that. I mean, not for the long term clearly, but for the very near term, yes. Are we done with the pullback in crude? Maybe not. You could still see $3 or $4 coming off, and that would mean another 5 to 6% of a decline from these levels as well. But $80 or 78, where we started this year, does look like a support that this year would hold on as well too. Because as I said, there is demand still coming back. We are reacting to a lot of weak economic data as well. China, for example, the trade data that we saw yesterday does tell you that for the month of August, the crude imports have seen a decline of 9%. Having said that, the way China is buying crude from Russia at those lower prices are very strong numbers. So, there is a change in map clearly. You have US on one side and then you have Russia and China. And the way China is importing from Russia is very strong numbers. So, there's a lot of change happening in the international markets.
What happens to us Indians who are like, sort of trying to make sense of all that's happening? Because if we look at gas per se, what happens to companies like GAIL, ONGC, which sort of extract those sources of energy for us, and eventually to city gas distribution companies, whether it's Indraprastha Gas, MGL, etc. Do they stand to get impacted with all this volatility? I'm
sure they do, and this is, for the longer term, nobody is saying that you will see energy prices come off. The near term, yes, and is the reason we have seen OPEC and allies come into action again. They had been increasing production, but now they are cutting production. And while we have seen 100,000 barrels per day of a cut from the month of October, there have been statements yet again saying that they could be cutting production even more going forward. Do they like levels below $90? They do not. So I think after all of this volatility, $90 is your pivot point, is where we will come to.
And now, yesterday, of course, we talked about how the cool off in oil prices should start reflecting in our fuel bills as well. But reasonably, what kind of a cut should we expect? Of course, in the next few months, it is likely to happen. Typically, these announcements happen around Diwali to sort of add to the festive cheer. But realistically speaking, how much of a cut are we looking at?
So, you know, the street is clearly divided onto that one, and you've seen 3 rupees to 1 rupee being talked about. So anything between that is what the market.
Minimum looks like a rupee.
A rupee at least in the next couple of months, because we've seen the prices come off like that. If you look at the last 1 week, we're off 5%. If you look at the last 1 month, we're down by 7 to 8%, and that is yet to reflect into Indian markets. So when it does, the quantum could be as much as 1 to 2
and
rupees.
when if and when say the prices of oil bounce back globally in the next few months, again will we see a reversion of that?
That does look like that, doesn't
God.
it? So I think as we were talking earlier as well, so watch out for those hurricanes that we see in Atlantic Ocean and the winter demand, which is expected to be quite strong. But the plus point is that depending on in next couple of days what Europe does and how Russia reacts to that, we've been looking at those statements coming in. That is where the markets will take cues from.
Yep, but for now at least let's rejoice in this short-lived happiness that we're witnessing with the as we speak are looking very, very resilient. So let's see how that plays out and for how long they will continue to be upbeat on this. But that's it for now from us. Thank you so much for tuning in. We'll be back again at 1 o'clock tomorrow with a fresh new update.